Welcome to the Jornaya Talks Mortgage podcast. I'm your host, Mike Eshelman, the head of consumer finance at Jornaya. Uh, Incredibly excited to have our guest today, Matt Tillman. He is a mortgage lead generation veteran. He's been in the industry for over 20 years. And who better to have on the show than Matt, who can really go through the history of mortgage lead generation. So welcome to the show, Matt. If you don't mind giving some quick background on who you are, what you do, and then we'll get into talking some good old mortgage lead gen.
Sounds good. Well, Mike, first of all, thank you very much for having me. I'm definitely looking very forward to this conversation as we've known each other for many, many years.
Yeah.
And it's definitely a pleasure to be able to take some time and reflect on the past and talk about the future here of mortgage lead generation. So for everyone in the audience, my name is Matt Tillman. I am the president of RateMarketplace. I've been in the mortgage lead generation space since 1999 with companies of the likes of GetSmart, which is now a Lending Tree property. I've also been a part of a company called FastFind, which is a company that I founded with individuals from GetSmart, and it was funded by Dan Gilbert of Quicken Loans. We went off and sold that business to Bankrate. So I spent some time at Bankrate on the click side of the world, really managing their lead or performance marketing business there. And then from there, joined a company called Adchemy. And Adchemy was really one of the kind of first, I guess, scientific type companies that entered the lead generation space with a mission to solve a critical problem around performance marketing and display marketing. From there, ended up selling the RateMarketplace business, or let me back up 1 second. RateMarketplace was actually formed or built within Adchemy. And then from there, sold the RateMarketplace business to an entity in New York at the time called XL Marketing, that is now known as Zeta Global. And then from Zeta, we ended up selling the RateMarketplace business one more time to an entity called Upside Holdings out of Denver, Colorado. And Upside is also the parent company of Suited Connector as well. So it's been quite the journey, over the past 20 plus years. I've definitely seen a lot change in this market, but it's really an industry that I've just grown to love. And as a result, I'm still here, and I've really enjoyed it.
Yeah, it's, thinking back, I got into mortgage in 2004 as a loan officer, calling on leads. So I can go back as far as about 2004, and what my experience was. You got into mortgage lead generation in the late 90s. I believe it was right around 99, 98, 99.
Correct, 99.
So first of all, how did you discover mortgage lead generation? I mean, how did you get into it?
Yeah, it was really an accident. It was definitely nothing planned. I went to college in Los Angeles and aspired to become an attorney. Then I ended up hearing the Al Gore speech on the information superhighway. And I was originally from the Bay Area and decided, that sounds pretty interesting. I'm a little more fascinated about that than going into the world of law. So as a result, I was working at Wells Fargo Bank at the time. And some executives of Wells Fargo were coming up to the Bay Area to start wellsfargo.com. And this is a true story. They asked me if I was interested in relocating to Northern California to help build out a sales center for Wells Fargo and their online bank. Didn't know anything about the call center world whatsoever, but said this would be pretty interesting. So let me go ahead. And I want to move back to Northern California, and I want to be closer to this center of the information superhighway.
Mm-hmm.
So it was a perfect opportunity for me to move back. I ended up moving back here, built out the sales center, and executives from the bank had actually already left the bank and started GetSmart. And at the time, GetSmart was a credit card aggregation website. and their business was entirely around being able to sell credit cards online. Clearly, that wasn't a market that was scalable at that time. And so they really decided to pivot and go for the largest financial transaction of a consumer's life and focus on the mortgage product. Probably about a year or 2 years into the business being started, they reached out to me and asked me if I wanted to come on board. And sure enough, I was ready to go into the whole startup world and small company world after being at Wells Fargo for so many years. So really, it was completely by accident. They brought me on board and asked me if I'd be an account manager to start. Sure. I was willing to do anything. And then at that point, I moved on to kind of a national director role, and that was exciting because it actually allowed me to get involved with some of the larger companies in the space and really have a deeper understanding of the inner workings of this internet world. And then from there, after being national sales director and we sold the business to LendingTree, I chose not to go on to LendingTree. And then that's when we started our next venture. So it's been quite the ride.
Yeah, I mean, that's interesting. I was looking up and saw actually LendingTree was founded in 96 and Lower My Bills, another big brand name, in 99. We've had a ton that have been started since then. It's obviously a very fruitful business. Today, consumer fills out a form, clicks submit, a bunch of magic happens in terms of data validation, verification, matching with the right lender. But back then there wasn't all of that sophistication, right? So, tell me some of these war stories about how you got leads to the lenders. And before we hit the record button, we were talking about how some lenders were asking for returns on some leads and how that process happened. And I'd be fascinated to hear these.
Yeah, so if we go back to 99, I mean, really, there weren't many competitors in the space. I mean, as you mentioned, LendingTree was around. There was a company called Home Shark that was a lead provider back then. A company called iOwn, but there weren't really, too many mortgage lead generation companies out there at the time. So for us, from a distribution standpoint, I mean, that was really the biggest challenge is, we were at a stage where we were ready to start generating leads. And the question became, how do we get these leads to buyers? So interestingly enough, there were a couple of methods. One was that you could actually receive the lead via FTP. So that was new. So, those that were receiving leads in bulk can set up an FTP folder and we could send it via FTP. We utilized an encryption technology called PGP. And that PGP stood for pretty good privacy. Okay. We would email leads. So email was new. Many companies did not know how to set up email for their entire teams. And not only that, but the issue was, well, how do you track the emails as they come in? The other method, which was really the primary method when we started, was FedEx. So leads would come in, we would print the leads out for individual buyers, we would sort them, and we would put them in a FedEx envelope, and large companies would receive their leads the next day. So we really went through a stage where the industry evolved significantly. The importance of getting a lead in real time really came to the forefront of the industry at that point. And then as we proceeded, it was more about, okay, well, speed to lead. Like, how do we quickly get these leads out? Well, as everyone knows, leads have quality issues at times, and things that go on are, well, I didn't get my leads, or this has a bad phone number and I want to return it. Well, all of those things were extremely manual at the time. So how do we verify that someone received their leads by email? we had a read receipt. And if someone said that they did not get their lead, we would have to go back through the archive of the read receipts to find which lead was associated with that particular email or that lead, and then identify whether or not that buyer actually opened the email.
Oh,
We knew what we had delivered via FedEx, so we really couldn't dispute the fact that the FedEx was sent.
mhm.
And then, from an FTP standpoint, it was easy to be able to see what you had dropped into the folder. But so many things were so archaic back then that, we were really trying to provide or figure out solutions or ways that we could overcome this. And then you get into the shared lead world where you now have that piece of paper that you need to print out 3 or 4 times. At the time, I think we were selling it 3 times. But you would then print out that piece of paper 3 times, put it in 3 separate FedEx envelopes, and then mail it out. And that was considered a shared lead. So we've definitely seen this industry evolve significantly over the past 20 years.
Yeah, I mean, it's not all that long ago, but it seems like a world away and how you're FedExing leads to a lender. I mean, I guess, I mean, who knows if it's true or not, maybe but if you're in Northern California and you're FedExing, so it's talking about speed to lead contact. So are your West Coast lenders getting that package before your East Coast lenders just because snail mail, or
Well, it was just the
is that
opposite,
even?
actually. So the East Coast lender would receive it first because, we would do an early morning delivery and it would show up at, call it, 9 or 10 a.m. Eastern time. And then the delivery here would be 9 or 10 a.m. Pacific time. So, an East Coast lender really had a 3-hour advantage on dialing leads. When I think back to some of the big companies back then, one was the Money Store
Mhm.
that was originally here in Sacramento, and then they were acquired and ended up relocating to or their headquarters moved to the East Coast, and that was a big change for them because they were now getting their leads earlier. So that was interesting. Other major buyers at the time included a company called Parkway Mortgage that was out of Kenilworth, New Jersey, and even a company in upstate New York called Mortgage Select. And I know Paul Knag may see this, but Paul is now still in the industry. But I remember when Paul was a buyer, and he spent a lot of time going back to upstate New York to see him. But really, that was the foundation of this industry, was about getting data or getting records and being able to make outbound dials on it, because it was significantly better than waiting on your phone to ring from a direct mail campaign.
Mhm. Yeah, absolutely. Now, how have you seen, from the lead generator standpoint, how have you seen it evolve over the last 20 years? I mean, marketing technology, targeting efforts, you can get very scientific and sophisticated today, but what was that like then? And what would you say is kind of like the biggest changes that lead generators have seen over the last couple decades?
Yeah, the biggest thing that took place was really the ability to ingest data, ingest leads. And I think that still is in the forefront of the industry today. It's how do you take a large number of inquiries, get them into a system, distribute them internally, and be able to provide some sort of quality control over the information that you're buying. Because again, marketing efforts continue to be, very important in the minds of all companies in order to not only attract but retain talent. So, the ability to really build a sales force is going to be as good as the marketing efforts that you have behind driving the performance. So, really, what I've seen over the years has been this evolution of, we go from an email to now being able to post data into a lead management system. Back then, I'll name a couple of names, but there was Leads 360 and a competing business called Lead ROI. And, I remember,
Kaleidico and
right,
Lead
Kaleidico,
Mailbox,
right,
right? Yeah.
right. All of these companies, right, all of these companies were out there really trying to provide the technical solution that mortgage companies were looking for. What ended up happening was that there was obviously consolidation in the space. I know Lead Mailbox is still out there today. Leads 360 became Velocify. So a lot of these companies still exist, but you also started to see the emergence of other companies that are in the CRM space coming into the mortgage industry to be a solution for this ingestion problem. And then, along with not only the ingestion problem that they were solving for, it's then about the quality control. So, what are the add-ins or the plugins that can be associated with this to help improve the quality of the information coming? There are many third-party systems that are out there that are now integrated with the lead management systems that allow for an improvement in overall quality. Then you have speed to lead, right? And I think that that is really the most important aspect of buying leads today for everyone. Um, Dialers are now integrated with lead management systems, where before this was a complete manual dial, where a loan officer would pick up the telephone, look at the phone number that's on the piece of paper, make a manual dial. There was zero tracking of the dial attempts. It was just either you made contact or you didn't. So the first thing that we always look at is, what's the contact rate? How
Mhm.
many of them have you contacted? Well, prior to the lead management systems, there was no way to quantify that whatsoever. It was always, it feels like we are contacting X number or X percentage of our leads. Well, the lead management systems took that guesswork completely out of there, and lenders are now able to understand all the way down to the loan officer level what the performance is. Um, and then you now layer in, the information that's provided by third parties about the consumer journey,
Mhm.
right? It goes from once the consumer lands on our landing page, what is the time from them landing on the page to the time that that lead is actually posted to the lender? Well, back then, as we just talked about, it was 24 hours in some cases, right? And now we care about, that delivery being sub-second, from the submission to that lead actually posting into the system. So there's been so many things that have just evolved over the years that have really changed the dynamics of this industry. And on top of it all, what you end up seeing is that, back then I named, I don't know, 3 or 4 different lead providers. Well, that number has increased exponentially over the years.
Oh, yeah.
Um, and there are so many lead providers out there that, all have their own secret sauce in terms of what they do and how they, generate and acquire leads. But, that focus around the quality has definitely changed the dynamics of this industry significantly.
Yeah, and you touched on some areas of how lenders are working leads, and this takes me back to 2004, 2005, as I'm a loan officer working leads. I remember I worked for a lender that CEO is Anthony Shea, HomeLoanCenter.com, technology forward thinking uh, leader, and we had a great proprietary LOS where the consumer's information would go in there, had a pricing engine in it with minimal fields. You can pull credit, see everything right within that LOS, but there's no lead management aspect of it. So I would literally get an email saying new lead alert, and it would have the consumer's information. I would manually dial out. So, I mean, who knows what my speed to lead contact was, but I created 4 folders in Outlook. And when I got a new lead emailed to me and I'd place some phone calls, I'd have a conversation, I would be managing that the way I felt was best for me and dragging this lead into, was it a hot lead, a warm lead, a cold lead, or is this one dead? The person told me to go away. They're not interested, or they already funded with someone else. And I would just move those leads from folder to folder as it made sense to seeing where and how lenders are working leads today, it's a world of difference. And more recently, when I was running marketing at a consumer direct lender, talking about speed to lead, I mean, I was chasing after, I knew my metrics. I knew exactly what our speed to lead contact attempt was. And I had an issue with one particular provider where for some reason there was a system update or whatever it may have been. My leads were delayed to me by about 10 minutes. I figured out, well, through the Jornaya, I was a client of Jornaya. So that's how I figured out the delay and how long the delay was. You could see a very distinct moment in time where that changed and my conversion rate tanked. And by conversion rate, actually, it's the early indicators, the contact rate. What was my contact rate on the very first dial attempt? And it was horrible.
Right.
So it's amazing that the competition, level of sophistication that lenders have today in chasing after those leads, it's miles and miles and miles different from where we were, 15, 16, 17 years ago.
Right. And it's, what's interesting about all of that is that while the technology has changed, the approach to sales has not. I mean, really, your ability to make contact with a consumer, build rapport, because again, this is the largest financial transaction of this consumer's life, right? The ability to establish and build rapport with that consumer and then sell them the products and services that are best fit for that consumer is really the foundation of this entire industry. And so that hasn't changed. But your ability to track the information and to know exactly where the consumer is along the stage has indeed changed. So all companies out there really need to be able to embrace technology in order to be competitive and successful within the space. Whenever I receive a phone call or I'm talking to someone that might be new to lead buying and they really have not um, uh, really taken on any sort of technology. They haven't embraced technology to, to really, be able to, um, manage leads whatsoever, and they plan to use email. My first response to them is, look, this is going to be challenging for you. I
Right.
can tell you right now, you are probably not going to be successful because of the level of sophistication of the companies that you are going to be competing with. And then I see them take two steps backwards because probably many others in the space are telling them the same thing. And they will then go out and find lead management solutions that can help them. But what that will entail from there is a clear understanding of how to use the technology. So it's this back and forth, push and pull. Like again, companies that are most successful today have been able to embrace technology.
Mhm.
Those that are most successful have even gone so far as to embrace understanding the consumer journey and really understanding what the consumer is going through in order to become a lead. And therefore, they can tailor what that communication is to the consumer based on information that they know about that consumer through this journey.
Yeah, exactly right. Totally agree. So we've talked about the history and a little bit about today, but what does the future of mortgage lead generation look like 10, 20 years from now? I mean, any predictions? I mean, you can go 2 years from now. I mean, what are your predictions of where mortgage lead generation is going to go?
Well, I think, this pandemic has really turned into a time in which you can see the complete adoption of the internet. I mean, consumers don't have a choice anymore. Um, while you would like to be able to walk into your local bank and sit down in front of a loan officer and talk to them about all the various options, that isn't an option today.
Mhm.
So one of the things that we've definitely seen is an increase in just consumer engagement online. I think consumers have become much more sophisticated about their understanding of of the internet, of advertising,
Mhm.
and they're definitely much more inclined to submit their information online. So I think part of it starts in the top end of the funnel is, how do you increase consumer engagement as well as the quality of the inquiries that you have coming in? You see many companies that are out there today many marketing companies that are utilizing technology to be able to, do things as simple as displaying dynamic rates to consumer.
Mhm.
Because the consumer's first question is typically, what is your rate, right? You see many companies that are putting that in the forefront of their messaging to make it very clear that, here's where rates are today, to give the consumer some idea of where that is. As our, for our business, we don't just generate leads, but we're also in the space of clicks and calls. So, my experience with Bankrate in the past gave me a very good understanding of the world of being able to send traffic to lenders. If you go back 20 years, many lenders did not even have a website, let alone a landing page that they could capture consumer information. Now we're talking about being able to have a complete digital mortgage experience. And companies are coming to us saying, how can you help us drive traffic to these sites that allows the consumer to be able to go from, an inquiry to almost a funded loan in real time? So, that's part of the evolution that I expect to continue to see, is that companies are going to expand on their utilization of technology to be able to increase the consumer engagement in their own funnels to be able to fund more loans. Because ultimately that's where that's what defines success with any marketing partner is, what is the ROI that you're seeing on these channels. We are seeing this definitely a pivot in the market from, a shared lead to much more of an exclusive lead, where, mortgage companies are willing to pay the premium to not necessarily have to go out and compete on every single consumer. Um, I think that we'll continue to see that evolution. We'll also continue to see, prices in the market increase as a result of this shift in how lenders are buying leads, moving from a shared market into more of an exclusive market. This pandemic has really changed the mortgage industry in that many of the companies have significantly increased, their agent capacity internally to support lower rates and a refi market that exists. So really the question is going to become, as rates start to increase in the years to come, what's going to happen in order to make sure that the marketing efforts of companies out there can support the capacity and demand that mortgage lenders have, while also being able to maintain the quality that's needed. One other thing I would say is that over the years, I've definitely seen a significant increase in the amount of data that is being shared between mortgage companies and marketing firms. It's not necessarily specific to, the individual consumer, but it's more on an aggregated basis that gives the marketing company at least some sort of indication on how they are performing through the various marketing channels that they're working in. This is going to continue to be tremendously important as we continue to grow this industry, because without the insights, we're challenged from a marketing standpoint about understanding what exactly is working best for partners. And so as we continue to see that level of transparency and engagement between the buyer and the seller, I think we're going to continue to see further growth within this industry.
Yeah, I geek out on this stuff. I mean, I love and I love thinking about, what the future holds. And it's exciting to be in the middle of it. It's really fun. And, we mentioned Paul Kanag in this podcast. There's just so many people that have been around through the last couple of decades to be a part of it. And it's fun and a pleasure to be working alongside you all.
Yeah, and I would encourage everyone out there. I mean, there's so many technology solutions that are out there that have really developed as a result of the evolution of this industry. One person I think about is a mutual friend of ours, Ethan Ewing with ProPair, and the insights that he can provide lenders in regards to, what their marketing efforts are. Now, this isn't, it's not really designed as, I don't mean to to sit here and promote all the companies that are out there, but I'm just saying that as an example, there are technical solutions to solve almost every problem that exists in this marketing space. This is quite different than what it was like 20 years ago when you didn't even know what the problem was. I mean, I think it's safe to say the problem started with getting a lead 24 hours later.
Right.
But in hindsight, we didn't know that that was a problem because that was the norm,
Mhm.
right? And even today, there are many things that we don't know, that there are companies that are out there that are actually trying to find or provide solutions for these common problems. We got into the live transfer space all because the number one issue that we were seeing was about contact rate. It was a problem. We wanted to provide a solution. So if we could eliminate the challenges that exist from being able to make contact with the consumer, and it could be a myriad of reasons why that would happen, but at least we would solve for the problem and just deliver consumers that were currently in market. We felt good about what we were doing as a business because ultimately it's our job to help consumers get in the hands of the right lenders to get their financial needs met.
You going down the path of Ethan Ewing, just, I mean, my mind is racing now because we could have a whole nother episode on the evolution of optimization from a lender standpoint. Because again, back at my time when the lead was coming in via email, if I wasn't in the office for a couple of days, and say I'm out Monday and Tuesday and I walk in on Wednesday, I have 2 to 3 days worth of leads emailed to me because the system didn't know that I was out. Email didn't say I was out. And then you start to get into these lead management systems where, are you logged in and available to take leads? And if so, you get these leads. Now you move on to what ProPair is doing, Ethan Ewing is doing. And, not only who's there, but who is the best individual loan officer available to handle this lead based on different attributes of the lead, so you can boost your conversion rate even further. I mean, that is some pretty sophisticated stuff that's going on behind the scenes with what he's doing. So
Right. And there are many other, there are many providers that are out there in the market that are providing enhancements to leads,
mhm.
which we didn't even talk about. I mean, iLeads is a perfect example where, they have a lot of consumer data that's available. They are really a company that is specifically engaged in the mortgage industry that knows a lot of insight about the consumer and their property and can provide assistance on, how do you find the right product for that consumer based on the various products that you have available. So there's so many solutions that are out there
and
that
that's Drew Warmington, who again has been in mortgage lead generation for a heck of a long time, that we all know.
Right. I think at one point in time we had, every vowel that was associated with the word leads, and they were a lead provider or involved. But no, seriously speaking, that there are just a lot of solutions that are out there for mortgage companies. I would say that the most important thing for all companies to consider is understand who they're working with. I mean, as I mentioned, there are so many lead providers out there. You really have to understand how leads are being generated. Are they a generator or are they an aggregator / reseller of data? And really take that into mind, because I think ultimately the quality of the product is only going to be as good as the marketing company that you're working with.
Mhm.
And being a direct lead provider and being able to understand this is how I'm generating leads is important for all buyers to know as well, in terms of the lead providers that they're working with.
Yep. Completely agree. Well, Matt, thank you so much. This has been a fantastic discussion. Um, if there's anything else you want to talk about, I think one thing in particular, how can people get in contact with you and have a discussion with you about buying leads or about their lead program if they're interested?
Yeah, it's very simple. I mean, my email address is very easy, just Matt, M-A-T-T, at ratemarketplace.com. And I'm more than happy to spend time with any companies that's out there looking to diversify their current efforts, or they're looking to take on new lead providers. As I mentioned, we don't just operate in the lead space, but we also provide clicks and calls. So we have, a lot of experience and a deep understanding of the entire marketing ecosystem around mortgage. So anything at all that we can do, please feel free to reach out. I will say that we've also expanded into other verticals too. So we're also in home services, solar, and as well as insurance. So, companies out there that might be looking at this, we do have marketing solutions available in those industries as well.
Perfect. And
So,
that's
Mike, and thank you for your time. I mean, this has been great, and I know that you and I have known each other for many, many years, and it's great to take time, especially during these times, to sit back and reflect on the past and look ahead to see what the future has to hold. So, thank you.
Yeah, thank you very much. I appreciate that. So that's a wrap for the Jornaya Talks Mortgage podcast, and please stay tuned for another episode. Thank you.